Crypto accounting for startups. Don't let it become a nightmare. If your startup accepts crypto payments or holds Bitcoin on the balance sheet and you're not tracking every transaction, well, let me tell you, the IRS is gonna have a very expensive conversation with you. Let me show you how to avoid that nightmare. How's it going? My name is Eric from The Cashflow Doctor, and I've helped dozens of Web3 startups navigate crypto accounting without losing their minds or their money to IRS penalties or audits or challenges like that. So let's talk about everything you need to know about this. Number one, every crypto transaction is a taxable event. Buying, selling, trading, even paying employees in crypto creates a taxable implication. I see a lot of founders who think that holding crypto or using crypto is not taxable, and that's incorrect. When you sell or trade it or receive it, you can't owe taxes on the gain, period. Let's talk about what cost basis is. Cost basis is what you paid for each crypto purchase. When you sell, the IRS wants to know your profit. A lot of folks use first in, first out, and that's the safest method and easiest to defend in an audit. Pretty simple to use. Coins like CoinTracker and Coinly can help you automate that process. Now, I want to recommend to you that you want to keep your business and personal crypto holdings and transactions completely separate. I cannot stress this enough. We had a client that once was mixing personal business crypto transactions, and it took us over 40 hours to untangle their tax return. Don't be that person. What we'd recommend is if you're accepting crypto payments and are not an active trader, consider immediately converting to USDC or similar stablecoins. For example, one day you invoice for $10,000 worth of Bitcoin, next day it could be worth $8,000. Converting to stablecoins will eliminate that volatility from your cash flow. Also, you're going to want to set aside between 25 to 30% of any crypto gains for taxes and treat it like any other business allocation and expense. Now, we had a client recently which had an NFT marketplace who accepted payments in Ethereum but never tracked their cost basis. So when they tried to calculate their taxes and their accounting, they had no idea what they owed or what their profit was. So what we did is we implemented proper tracking systems and reconciled 18 months of transactions and saved them from potentially an audit disaster. But it took up months to clean up what should have been done from day one. Now, for founders, you want to know that the IRS is actually getting really serious about crypto compliance, and states are following suit. So get ahead of this now and avoid getting in trouble. With that said, if you're planning on raising capital for your company, click the link below to download a free How to Raise Your Series A with Confidence checklist. And if you are dealing with complex crypto transactions, feel free to book a consultation. We specialize in Web3 startups and can set up systems to help you keep compliant automatically.